Credit cards are used almost 30,000 times per second around the world. That's right, these little pieces of plastic have completely changed how we spend money. But how did we get here? How did these cards go from being a novelty to something we can't live without? Today, we're diving into the history of credit cards, tracing their journey from simple store tokens to the global payment method they are today. If that sounds interesting, let's get right into it. Long before credit cards, people still had ways to buy things without paying right away. In ancient times, bartering was common, trading goods for other goods. But as societies grew, more organized systems developed. For example, in Mesopotamia, clay tablets recorded debts, kind of like an early IOU. People didn't carry money, but they had a record of what they owed or were owed. Moving forward to the 1800s, small businesses and local stores started offering store credit. Customers could buy items on credit and pay later. Store owners kept track of these debts in ledgers. It was all about trust, knowing your customer and trusting they would pay back. This system worked well in small communities where everyone knew each other. In the early 20th century, as cities grew and people became more mobile, businesses needed a new way to keep track of credit. They started issuing metal charge plates or charge coins to their trusted customers. These coins had the customer's name and account number engraved on them. The customer could charge a purchase to their account by presenting the coin. These early systems were limited and they often only worked at one store or chain. These early credit systems laid the groundwork for what would eventually become the credit card. They showed that people wanted and needed a way to buy now and pay later. But it wasn't until the mid-20th century that the idea of a universal credit card really took off. The modern credit card as we know it began with a simple idea. What if there was a card that could be used at multiple places? This idea sparked in the mind of Frank McNamara, a New York businessman, in 1949. The story goes that he was dining out with clients and realized he had forgotten his wallet. Embarrassed, he thought there had to be a better way to pay for things. This moment led to the creation of the Diners Club card in 1950. The Diners Club card wasn't like today's credit cards. It was more of a charge card, meaning you had to pay off the full balance each month. But it was revolutionary because it could be used at multiple restaurants, not just one. The first cards were made of cardboard and issued to 200 people, mostly friends of McNamara. At first, only a handful of New York restaurants accepted it, but the idea quickly caught on. Within a year, the Diners Club had over 20,000 members and was accepted at more than 1,000 establishments. It was the first time people could use the same card at different businesses, and it paved the way for the universal credit card we use today. After the success of the Diners Club card, banks saw an opportunity to get into the credit card business. The idea was simple: create a card that could be used anywhere and allow customers to pay off their balance over time. This would give people more freedom to buy things without having to worry about paying right away. In 1958, Bank of America introduced the Bank AmeriCard. It was the first bank-issued credit card, and it worked differently from the Diners Club card. Customers didn't have to pay the full amount every month. They could make smaller payments over time. This made the card more appealing to everyday people who wanted to manage their spending more flexibly. Bank AmeriCard was initially offered to customers in Fresno, California as part of a trial run. The response was so positive that Bank of America quickly expanded the program. By the mid-1960s, the Bank AmeriCard was being used across the United States. Later, it would evolve into what we now know as Visa, one of the biggest credit card networks in the world. Not long after Bank AmeriCard, other banks wanted in on the action. In 1966, a group of California banks came together to create MasterCharge, now known as MasterCard. Like Bank AmeriCard, MasterCharge allowed customers to carry a balance and make payments over time. The competition between these two cards helped push the credit card industry forward. The introduction of bank-issued credit cards changed the way people thought about money. Instead of just being a tool for the wealthy or for businesses, credit cards became something that almost anyone could have. By the 1970s, credit cards were becoming more common, but they still weren't everywhere. That started to change as technology improved and more businesses realized the benefits of accepting credit cards. The introduction of magnetic strips on the back of cards made transactions faster and more secure. This little strip allowed information to be read by machines, making it easier for banks to process payments. During the 1970s, Visa and MasterCard, formerly Bank America and MasterCharge, began to expand their networks globally. They formed partnerships with banks in other countries, allowing customers to use their cards when traveling abroad. This was a big deal at the time because it meant that people could make purchases and withdraw money in foreign countries without needing to carry large amounts of cash. The 1980s saw even more growth as credit cards became a normal part of everyday life. More and more businesses started accepting credit cards, not just in the United States, but around the world. The development of automated teller machines, or ATMs for short, also helped as people could now use their credit cards to withdraw cash whenever they needed it. The 1980s also saw the rise of new types of credit cards, such as rewards cards, which offered points or cash back on purchases. These incentives made credit cards even more attractive to consumers. By the end of the decade, credit cards were no longer just a convenience, they were becoming a necessity. The 1990s brought in big changes for credit cards. With the internet becoming popular, online shopping started to take off. Credit cards were the main way people paid for things online. This changed how people thought about shopping, and it made it easier and more convenient. During this time, companies also started offering rewards for using credit cards. You could earn points, cash back, or travel miles just by using your card. This made credit cards even more appealing. More people started using them for everyday purchases. Security was a big concern as more people used their cards online. So in response to that, new security features like chip technology were introduced. This made credit cards safer to use both online and in stores. The rise of smartphones also changed how we use credit cards. Mobile payment apps like Apple Pay and Google Wallet let people store their card information on their phones. Now, you can pay with just a tap of your phone, making it even easier to use credit cards. Today, credit cards are more than just a way to pay. They're a part of our daily lives, helping us earn rewards, track our spending, and even build our credit scores. As technology continues to evolve, so will the ways we use credit cards. But one thing is clear, credit cards are here to stay. Credit cards have changed how we spend money. Before credit cards, people mostly paid with cash or checks. You could only buy something if you had the money right then. But with credit cards, you can buy now and pay later. This has made it easier for people to make bigger purchases, like appliances or vacations, even if they don't have the cash on hand. Because credit cards are so easy to use, people tend to spend more. Studies have shown that people are more likely to make impulse purchases when using a credit card compared to cash. This has led to more consumer spending, which helps the economy grow. Businesses like credit cards because they encourage people to spend more money. However, there are also downsides. Credit cards can lead to debt if you're not careful. It's easy to swipe your card without thinking about how much you're spending. If you don't pay off your balance each month, interest charges can add up quickly, making it hard to get out of debt. Overall, credit cards have had a big impact on how we handle money. They've made it easier to buy things, but they also require careful management. Used wisely, they can be a powerful tool for managing your finances and taking advantage of rewards. But if misused, they can lead to financial problems. As we look to the future, it's clear that credit cards will keep evolving. New technologies and trends will continue to shape how we use them, making payments faster, safer, and more efficient. If you enjoyed this video on the history of credit cards, don't forget to hit that like button and subscribe to our channel for more fascinating stories about the history of the things we use every day. Thanks for watching, and we will see you in the next one.